Yeah. So essentially, when you look at sort of the current landscape of the life settlement market, what people are looking for is a stream of returns, some sort of capital appreciation that's uncorrelated with the stock market and all kinds of other assets. And what the people in the current market are doing is essentially trying to find people that have a fairly short life expectancy, whether they are elderly or whether they have a terminal illness. They're typically looking for people that might have a life expectancy of, say, 5 years or less. And what they're doing is, for somebody that has something like a universal life policy that has very little cash value in it, they are trying to do an arbitrage between the premium payments they need to make to keep that policy in force through the person passing away and what the ultimate death benefit will be on the other side. So because the policies they're buying have very little cash value in it, if the person that owns the policy just didn't want to pay the premiums anymore, they're going to end up with $0. So let's just use an example. Joe is 75 years old. He has a policy with $1 million death benefit and no cash value. And he really doesn't want to pay these premium payments anymore. He doesn't really have any heirs that might need the death benefit. So what a life settlement company may do is say, hey, Joe, we'll offer you $250,000 to take that policy over today, right? They're going to pay the premiums. So who knows what those premiums are going to be? Maybe it's another $250,000 in premiums for the 5 years. Joe passes away when he's 80. They paid Joe $250,000. They paid the insurance company $250,000, and their return is the death benefit of $1 million. So let's say that they're going to earn a return somewhere around 10% doing that. So that's what the people in the market are doing today. The thing is, the types of policy and the situation and the person that owns it ends up giving you like a very, very narrow requirement in terms of who is going to be eligible to make that kind of deal to earn the returns that they want from their investors. What we're doing, and
I can just stop you for a second, Jeff.
Yeah.
Folks at home, like you can see, is like if you've been watching TV and you see the ads for these, lifestyle, and it's like, hey, call our company and see your life insurance policy could be worth more than you think. And usually they'll show like an older guy and woman, frolicking on the beach or something, or taking their grandkids or going dancing and listening to Neil Diamond, or it's
a lot of boating and biking.
Yeah,
too.
It's not showing people who are in their 20s, because that's the point. And if you go to the website and say, the FAQ, what kind of people are we looking at? It's like, it'll say you got to be older, or, if you have some kind of condition where you're not expected, they're diplomatic about it, but it's basically, if you're not going to die anytime soon, don't talk to us. We're not interested.
Right.
Okay. But what we're doing is the opposite of that. So can you explain how that happens?
Yeah, absolutely. So the other interesting thing is, even though those groups are trying to find, 75-year-old Joe, probably 90% of the people that call in are not that, right? Mm-hmm. So talking to some of the people in the market, like a healthy 65-year-old is still out of their wheelhouse, right? So they end up getting a lot of inquiries on people with policies that just aren't going to fit what they're looking for. So when you sort of if you look at life insurance policies from like an ROI standpoint, just over the whole life cycle on average. So what the current industry is doing is essentially taking the wrong end of the underwriting bell curve, if you will. So the people that are going to live a little bit shorter than average. So, if you look at it from the insurance company's perspective, those are the ones that they lose on, right? So that's on the losing side of the ledger for them. Mm-hmm. And they would probably rather those policies just get surrendered or lapsed than have somebody buy them and keep them in force for a couple of years till somebody passes away. Mm-hmm. On the other hand, if you look at sort of just the whole average, and one thing I'll get back to is, in order to make those sort of deals, the companies in the life settlement market need to do a whole lot of like medical underwriting. So they need to like go through doctor's reports. They do actuarial life expectancy reports. Like a lot of stuff goes into figuring out how long someone might live. Mm-hmm. When you look at the average, so let's say you didn't do any underwriting at all, and you just went out and bought life insurance policies scattershot, right? Just like dartboard, we'll buy anything. the average return is going to be somewhere in like the 4 to 5% range, right? And what that looks like is almost like a bond, like a fixed income asset. So it's not something that's going to have the return profile of equity or the stock market, but it's something that has pretty similar returns to, government bonds at this point in time, right? Or any other sort of safe asset. So what we're looking to do at Infineo is acquire whole life policies that have just sort of the average attributes, bundle them together into instruments that look like fixed income. And the interesting thing about it is, there's several interesting things. One is there's a ton of it out there. So if you say that the current life settlement market, in terms of people buying policies is somewhere in the hundreds of millions of dollars of policies bought every year, there's a couple $100 billion available of this type of policy. And also just in terms of, we wouldn't need to do medical underwriting as long as the policy is structured in a way that makes sense. It also needs to be typically a couple of years old, both for regulatory reasons, but also because there's drag from commission payments to agents and stuff like that. Once you get a couple years in, it's really a steady Eddie sort of fixed income looking instrument. One thing that I really like about it is if you look at what happens just when interest rates go up, the principal value of bonds goes down, and then the opposite. That is something that could really mess around with things like pension funds and bank balance sheets and stuff like that. When you have what we're talking about, a pool of these whole life policies, essentially you can always turn them back into the life insurance carrier for a stair-step escalating value. So there's no possibility of, if interest rates go the wrong way, you're hosed in the short term because you don't, your principal value goes down. So it's just a very steady stream of returns. Also, if interest rates go down, they were at zero for years up until the past year or two, the return on whole life is going to still be, in that 4 to 5% range. So it's just a very steady form of return.
Okay, yeah. So a lot of different things. Let me just restate it since we're giving a little infomercial here for Infineo and what we're doing. So yeah, I like to classify it as a win-win-win. That, like Jeff was saying, folks, the standard kind of in the existing life settlement market, when people think of it, it's typically the outside investors really only want to get policies from people who have a short runway because they need to get the death benefit is what's driving it. That's what they're in it for, and so that's why they don't want to get and that's why they need a bunch of underwriting to say, oh, I want to make sure this person really is sick. Or this person, because they don't want the person living too long, because then that reduces their return. Whereas, we're not. That's not what we want the policies because of their cash properties, not because of the death. I mean, the death benefit is not anything to keep in mind, but that's not what we're interested in it for. So it's a completely different type of existing policyholder that we might be able to reach a mutually agreeable deal with, because they're people with policies like that. Someone who's 35 and healthy, and it's just his job changed. He can't keep up with the premiums on this whole life policy, but maybe it's worth $50,000 if he surrenders it. We can come in and say, whoa, we'll give you whatever, $70,000 for it, and we'll take over the premium payment. So it's good for that person. He can't sell it to an existing life settlement company because they're going to say, no, you're young and healthy. We don't want to be sitting on that for 20 years paying premiums. So we're his only outside option. So that's good for him. But it's also, like Jeff said, good for the carrier. The carrier wants the policy from a healthy 35-year-old to be kept in force. And they would lament the fact that, oh yeah, things change and occasionally a lot of our clients need to surrender it, but we wish they didn't. So these are exactly the kind of policies they want. And then the last leg, we get them, we pool them together, we build some new asset, we issue tokens, like on a pool of these things, for example. And then that has a lot of interesting properties to outside asset managers who, instead of just being in traditional fixed income, we're saying to them, why don't you carve out a portion for this asset that has corporate like bond returns in the long run, but no interest rate risk. Interest rates go up, the market value of your treasury, you're sitting on 10-year treasuries, that's going to go down. Not these things, because you always have a floor, you can surrender them back to the carrier to get the cash value. So, and that's contractually locked in. And it's like Jeff said, it's a staircase. So anyway, that's just me to reiterate kind of what you said there, Jeff. Give a little commercial for Infineo. In the last, whatever, we got 10 minutes or so here, Jeff, can you maybe speak? So you had seen a lot of businesses. You've been doing a lot, coming into this. you've been in the trenches now with what we're doing here, sort of in the worlds of life insurance and blockchain technology. Maybe for people who have not had that experience, can you like if there's business, people in the financial sector out there listening right now who have not been immersed in blockchain, can you maybe tell them like what have you learned, or what maybe do outsiders not realize, or maybe it's AI too? I know I've been working more with the AI section than you have, but anyway,
Sure.
Do you get what I'm asking? Like things that until I spent the last 2 years working in Infineo, I didn't realize such and such.
Yeah. So I don't know. This may be interesting. This may be not, but I'll
go for it. Just sell it, and
so
people are going to tune away if it's not.
Yeah. So one thing that's interesting to me is prior to starting with Infineo, I really had zero experience in either blockchain or crypto or life insurance.
Mm-hmm.
And a lot of relevant experience that could go into all those different things, but not anything direct. And one of the things, and because these markets like move really quick, not the life insurance market, but the crypto and blockchain side of things, I saw a lot of the early projects sort of called on the blockchain side of things seem to be pretty superfluous. So if you hear the word NFT, you're thinking of, Bored Ape NFTs and all that sort of stuff, which great, digital art is cool, I suppose, but I didn't really see a lot of meat, if you will, in a lot of the applications that were going on. And just even me just kind of like opining on like, what could you use this technology for? If you look at like replacing Ticketmaster and things like the problem of counterfeit tickets being sold on StubHub and stuff like that, that's a use case for blockchain, right? If you had an NFT that actually represented your ticket to an event, it was sort of an immutable thing that was tracked in one place, as opposed to somebody, scanning PDFs of concert tickets and uploading them to StubHub and, altering them and stuff like that. It's an immutable record. So could be music royalties, could be, whatever. So when I saw what we were looking, or what Infineo was looking to do in the blockchain space of life insurance, it was like, hey, this is a real use case for this stuff that could solve a bunch of problems. One of the things that we always talk about is various inefficiencies sort of in the back end and the back office of the life insurance industry. Lots of paper, antiquated software systems, stuff like that. If you think about it, like a life insurance contract is really an NFT, right? It's a unique, bespoke contract specific to you. And by the way, we also know there's a secondary market for them, which has a lot of frictions right now because of a lot of the things that have to go on, like we talked about with life settlements and medical underwriting and stuff like that. The transaction costs of executing those sales are really high. And when we look at what we're doing, we don't need all those things, essentially trading life insurance policies like NFTs is a much cheaper, efficient way to do it, right? So I think one of the things that is a really good example is there's a company called Figure that is essentially doing home equity loans, as NFTs, if you will. And if you look at sort of the market for doing, asset-backed lending in the US, there's this, again, really antiquated system of, you have to file liens at the county recorder's office to show that, you have rights on this property. If somebody sells it, you're going to get paid out on your loan. So Figure was able to essentially take a lot of these transactional intermediary layers and compress them down to fewer layers that could happen instantaneously with blockchain. So those sort of applications, I guess really the boring applications, like a lot of the back office type stuff in securities and finance and stuff like that, are where I think you're going to see a lot of efficiencies with blockchain.
Okay. Yeah. I mean, you sort of touched on the way I would have answered that question in terms of like, what have I learned in the past 18 months or what have you that I didn't know going into it is how far along the tokenization of real world assets has gone and how many household name companies are in this space now. Like, I knew, by the year 2050, lots of financial transactions are going to be on blockchains of various, but I didn't realize that, by 2025, you're going to be surprised at how much stuff is going on there. Infineo's getting involved in doing it with life insurance, but it's not as sci-fi as I had thought 2 years ago. And so that's
right. And I think the other thing that's interesting is I think the biggest ticket applications that are going to use blockchain, the consumer or the end user or whoever it is isn't even going to know there's blockchain involved. It's just what goes on in the background. Right. Almost like a new form of a database or something like that. And that's one thing where you have to go through some technological learnings, if you will, to get into, having your NFT wallets and all that sort of stuff to buy your Bored Apes. But I think the real heavy hitting blockchain use cases, all that's going to be abstracted away. And the person that's sort of on one end of the user experience isn't even going to know that anything related to blockchain is involved. It's just sort of the internal guts of the system.
Yeah, like I've heard people say, you don't need to know how quantum physics works to use your iPhone.
Right. So, exactly.
Yeah. So it's the same kind of thing here. And I did see that like in the earlier, because I knew a bunch. So again, folks, Jeff knows he was distinguishing between crypto and blockchain, that crypto uses blockchain, but that's the distributed ledger, public ledger technology is that's a separate thing. But yeah, like in the early days of Bitcoin, I knew a bunch of people who were like evangelizing it and going around and some other people were like, if it's a new, like people didn't have to go around saying, hey, the horse and buggy is really outdated and you should really use an automobile. Like you didn't have to go beating them over the head with it. Like you could just kind of, if it's a new technology, it's going to work. It's going to be, the adoption is going to be pretty quick once you work out and make it convenient for the user. So I think that's what we're seeing now. Like you say, with Figure, that people getting HELOCs that way, they don't even know that there's blockchain involved.